Welcome to the Be Smart podcast, how not to be an idiot with your money. Unfortunately, this past weekend, I was a little bit of an idiot with my money, but we'll get to that soon.
Whoa.
Yes, we will get to that.
Okay.
First, though, we've got kind of a 10 out of 10 banger lined up today. We're going to talk a little silver and gold, naturally, illegal tariffs in the US dollar, gambling mania reaching even dumber highs, and what history says about investing in September. And then we're going to dive back into the mailbag for a follow-up question based on the guy who wrote in last week. Let's roll, though. How was your Labor Day weekend? You get some good R&R, splash around in the pool, grill some burgers, inhale some hot dogs.
We had a party. I was the chef. I cooked burgers on the grill. I'm a terrible cook, but that's one thing I can do is I can cook on the grill. So everybody was happy with that. The weather was perfect. I did manage to work on the novel a little bit. Wrote 3 chapters of that, so made a little more progress.
You want to go ahead and jump into the headlines?
Yeah.
Let's start with gold and silver. Gold extended a 6-day rally to print a fresh all-time high. It's currently trading north of 3,600 last I looked. The prospect of U.S. interest rate cuts boosted gold as well as silver, with traders seeking safety after a sell-off in equity and bond markets. Also worth mentioning, gold and silver have more than doubled over the past 3 years. There are several factors here, including geopolitics, the economy's overall health, and global trade. Then there's Trump's attacks on the Fed, including this whole Lisa Cook fiasco, whether these tariffs are legally imposed, and the neglect of the budget. So you've mentioned before that the time to add to gold is when it pushes through 3,500 in spot. So what are we thinking now?
That happened. You got to add to it. I added to it. Yeah, the gold chart was one of the most beautiful charts I'd ever seen. Peaked at 3,500 back about 5 months ago, consolidated, just broke out. It's running like an antelope, as I like to say. There's going to be some drawdowns here and there. There's going to be some backing and filling, but basically the next stop for gold is 5,000, So, and for all the reasons you mentioned, the tariffs are part of it, but Trump messing around with the Fed, wanting lower interest rates. We're definitely going to end up with yield curve control at some point. All of this factors into it. So, I mean, this could be like a, 2-hour long discussion. I'm just kind of boiling it down to the main points.
And you've held gold for a really long time now. How many years is it?
20 years.
20 years. At what point, and I know you kind of go into this in this week's Jared Dillian letter, when do you think about selling? Or is that not even on your radar right now?
It's always on my radar. As an investor, as a trader, when you walk into the desk in the morning, you have to ask yourself, if I were to start over with a portfolio, is this the portfolio that I would choose, right? Like or are you holding on to positions for sentimental reasons, for legacy reasons? You should have sold them, but you haven't. Like, these are the questions you constantly need to be asking yourself. And the thing with gold is, we had a gold bubble back in 2011. Like, it was a gold mania when it got up to 1900. There were all these cash for gold stores. There were gold commercials. Like, people were buying stuff from the precious metals websites. Like, people were buying coins and bars. Like, it was a real mania. We do not have that right now. Like, gold broke above 3,500. It did not make the news. Outside of a couple of gold bugs on Twitter, like, nobody's really talking about it. Everybody is focused on DoorDash and Carvana and Google and Microsoft and, and crypto. Like, this is really one of the biggest bull markets of all time that is unfolding right before our eyes. 98% of people have no idea that it's happening. They don't even know. So this is the furthest thing from a bubble that you could possibly ask for, right? So from a sentiment standpoint, This is one of the most bullish setups I've ever seen. So I think it's a straight shot to 5,000, and then we'll see.
Lastly, on this topic, what are your thoughts on silver here?
Everything I just said applies to silver. Um, Silver is part industrial metal, part precious metal. It's used a lot in solar. We're going to be in spite of what Trump says about like federal funding to solar, we're still going to be using a lot of solar. There's still going to be a lot of demand for silver. There isn't enough mine supply for it, so it's now silver. The resistance was at 40. It broke through 40. It's trading 41 and change, and the next resistance for silver is at 50, which is the all-time high. And it got to 50 in 1979 and 2011. This would be the triple top if it gets to 50. If it breaks above 50, that's all-time highs. It's going to run. It's going to go to 100 or who knows.
Let's talk about some of this tariff stuff and its impact on the dollar. So, President Trump on Tuesday said his administration would seek an immediate hearing from the Supreme Court in hopes of overturning an appeals court's ruling deeming most of his tariffs illegal. I want to know what happens to the US dollar here if the courts decide that the emergency tariffs are null and void. I mean, I'm guessing it'll rip. What are your thoughts?
Should go up. Now, the appeals court made that decision, but actually left the tariffs in place. It did not void the tariffs. So ultimately, the tariffs are in place until the Supreme Court decides otherwise. I talked a little bit about in the Daily Dirt app. I think the Supreme Court is going to rule against the tariffs. I really do. I think Thomas and Alito will vote for it. I think maybe Kavanaugh will vote for it. Gorsuch will not. Amy Coney Barrett will not. And of course, the liberals will not vote for it. I think it's going to be a 5-4 or 6-3 decision against Trump. And then who knows what the hell is going to happen? Because the whole plan for his administration was he was going to raise all this revenue with tariffs. I mean, basically, he'll have to work with Congress, but that's going to be slow and time consuming and messy. So, but the idea that like one person can impose restrictions or conditions on trillions of dollars in international trade and change his mind at the drop of a hat and cause all this chaos and confusion, like that really isn't a good system. Regardless of whether you agree with the tariffs or not, like having one person decide unilaterally is not really a good system, you know? So, I hope that the Supreme Court rules against it for a whole bunch of reasons. Number one, I'm long the dollar. So I just selfishly I want the trade to work, but also from a principle standpoint, I don't think the president should be in charge of tariffs.
Yeah, I'm sure Trump will have a classic meltdown if that's the case.
He will turn into a fire elemental.
Yeah, 100%. We're going to get into gambling here a little bit. Sports betting and stock trading have never been more closely connected. In mid-August, Robinhood announced it would begin rolling out events contracts for college and professional football. A day later, FanDuel said it would soon be offering its users event contracts on financial products ranging from stocks and Bitcoin to oil and gold. And then headline 2 here, people are putting money on whether Trump will end 2025 in the White House. Contracts are currently showing bettors putting a less than 10% probability on Trump leaving the office by the end of 2025. This has to do with some of the recent health reports that have been circulating. This mix of investing and sports gambling has reached new degenerate highs, has it not? I mean, now we're betting on whether the president lives or dies this year.
I am sort of sympathetic to this. Like, I'm a libertarian. I'm a free markets guy. I think people should be able to bet on whatever they want. But, in terms of the sports gambling, like, I'm a baseball fan, and there's been a couple of gambling scandals in baseball this year. The closer for the Indians is this guy named Emmanuel Clase. And what they found was that, did you know that you can bet on a single pitch, whether it's a ball or a strike?
No.
Like, I didn't know this. But what they found was in the first pitch of some of his at-bats, he would throw like a wild pitch. He'd throw a pitch in the dirt. And then they went back and saw that there was all this betting activity on that pitch, right? So there is going to be a monumental gambling scandal in sports at some point. going all the way back to the Chicago Black Sox. Like somebody's going to throw the World Series, somebody's going to throw the NBA Finals, and that's going to be the end of sports gambling. In terms of the event contracts, there's actually like an economic use for them. Like for example, like this is a really stupid example, but let's say I have a newsletter company, right? And I think AOC, if she became president, is going to regulate newsletter companies, right? Or put them out of business. Okay. So if you could bet on AOC becoming president, like if I bet on AOC becoming president and I got 4-1 odds and she became president and I won $4 million, that would offset the losses that I would incur from my business, like if she became president. So some of these things actually have an economic use. Most of it is Taylor Swift going to get engaged, which I'm sure you saw that one. Like somebody had inside information and started like scooping up those contracts.
I opened up the ESPN app just to like check scores, and it's got this breaking news, huge banner at the top. Taylor Swift, Travis Kelce engaged. I'm like, what are we doing, ESPN? This is what we're reporting on now. Like, it's such a joke. But anyway, at the top of the episode, I said I was an idiot with my money this past weekend. It was from sports gambling. So every season for college football, I usually just set aside like $100, gamble on some games. I lost every single bet, dropped $50, and then I immediately decided I'm taking another 50. I'm cashing out. I'm done. This is a sign. So I'm not doing it anymore. I'm just not doing it. It's like burning money. Absolutely stupid stuff. A couple main topics here. Sell in September or keep buying. History says you should sell in September. Wall Street is saying you should keep buying. Some key points here. September is historically the worst month of the year for stocks, with the S&P 500 and its precursor indexes before 1957 falling more than 1% on average since 1928. Still, experts point to strong earnings growth, impending interest rate cuts, and healthy AI demand as reasons to be bullish in the long term. You agree with this? Disagree? Is it time to stop smashing that buy button on these AI-driven names?
I saw a tweet from Helene Meisler. Do you know who she is?
No.
She's been around Wall Street for a long time. She's a technician. She does charts. And she posted a quote from Vlad Tenev, who's the CEO of Robinhood. And I'm paraphrasing, but he basically said that in the future, nobody will even need to work anymore. They will just invest.
I saw that. Did you tweet something about that?
I retweeted it. Yeah.
Yeah.
So this is kind of where we are. Like nobody needs to work anymore. We can just rip stocks around.
Just get into Robinhood.
This is not the type of stuff you see on the lows.
I want to talk about whether or not you're bearish right now. And if I'm overstepping, please let me know. But you've been writing about this a lot in the Daily Dirt app. I want to go through some of the examples of things you've been writing and tweeting about. Starting with, can you speak to this idiocy and irony of the bullish IPO? And I'll throw up a chart here just so we can show up, mark the high with the NASDAQ. This feels almost make-believe to me, but I know it's not.
There is a company called Bullish, which is a crypto exchange. And it seems kind of sketchy to me because I don't know anybody that trades crypto on Bullish. I never heard of anybody that trades crypto on Bullish. This sounds like ZZZZ Best. Do you remember that one? Did you hear about that one? This was a carpet cleaning company that went public in the 70s. It was run by a guy named Barry Minko. And he fooled the bankers. The bankers were doing due diligence, and he's like, he's driving with them, and he points at this skyscraper off in the distance, and he's like, that's where our offices are. And they're like, can we see it? And he's like, no, we can't see it. And he keeps driving, and he basically fooled the bankers and went public, and it was like a totally sham company. I'm not saying now, before we get sued for libel or anything like that, I'm not saying Bullish is a fraud or anything like that, but it's a company named Bullish went public on the highs in the stock market. I mean, the sentiment implications of that are incredible. A company named Bullish went public. So Brent Donnelly, who's a friend of mine, he has his own newsletter, which you should check out. It's called AMFX. And he posted a chart a couple days later of how the IPO perfectly coincided with the top of the stock market and then went down like ever since. So look, like I'm a little bit of a perma bear. I like to trade from the short side. The price action is a little funny. Am I going like crazy short here? No, I'm not. But just like, I don't know, like sentiment is very stretched.
I saw you also retweeted something about sell orders. This was from Kevin Malone. Out of the top 200 insider trades over the last week by value, 0 out of 200 were buy orders. I've never seen anything like this in my life. Speaking of make-believe, is this real? I mean, are investors barreling through the exits like this suggests?
Well, this is insiders. This is company insiders. Now, with insider transactions, most of them are usually sells, right? Because if you're an officer of a company, you have 10, 20, 30 million dollars worth of stock. You sell. You don't necessarily sell because you think the price is going down. You sell because you're going to buy a new house, you're going to buy a plane, you're going to diversify your holdings, whatever. So people sell for all different kinds of reasons, but usually there's also insider buys, right? Like there are officers of a company who are bullish on their stock. They do have inside information and they're buying the stock. So out of this list of insider transactions, they were all sells. There were no buys, none.
One more thing before we get into the mailbag. Small caps have hit their highest levels since March relative to large caps. So we'll throw up a chart here of IWM and IWB. What does this suggest about the market? Are large caps in for a rude awakening? I mean, this does feel like the perfect time for you and Adam to launch your Heartland Investor Service.
It is the perfect time. It is the perfect time. Like the timing on this is unbelievable. This podcast, when's it coming out? Tomorrow? Is it going to come out tomorrow?
I think so.
Okay. So basically, you're going to have a couple of hours left to subscribe to this newsletter and get the introductory price, right? If you are like a lot of people, your holdings are probably predominantly large cap stocks, right? Like including me. Like I don't really have a lot of exposure to small cap. I don't really research small cap stocks. I don't know about them. Adam is a really interesting guy because his knowledge of I've seen his first couple of picks in this newsletter. I'm like, what the hell is this stuff?
That's how I reacted.
Find these things. Like it's incredible. And if you look at the charts, they're like good charts. Like they're good companies. You don't even necessarily have to be bullish on small caps to subscribe to this newsletter. Think of it in terms of diversification, right? You're just diversifying away from large cap growth and into a different section of the style box. You're going to get some small cap exposure and you're going to be more diversified. And, Adam is a very good stock picker. He's worked with me for 7 or 8 years. And, I don't want to say a lot, but probably half of the picks in the Street Freak newsletter have come from his idea generation. So highly recommend the Heartland Investor. If you're listening to this right now, you should sign up.
Right. And like you said, at midnight on Thursday, that price is jumping, so you might as well save yourself the $1,000.
Yep.
If you've been on the fence, for sure. Let's get in the mailbag. Do you remember this 71-year-old guy who wrote in about his gains on some of the large caps?
I don't. You have to refresh my memory.
All right. He writes, thanks for highlighting my question on your latest podcast. I am the 71-year-old guy with some decent long-term gains. Just for the sake of discussion, my net worth is 15 million plus. My long-term gains are roughly as follows: 475K in Apple, 182K in Amazon, 243K in Google, and 670K in Nvidia. What I struggle with is why should I sell these companies, which I still believe will perform well over the foreseeable future, to pay Uncle Sam 20%, then do what with the proceeds? Again, is there an economic way to protect these gains? I don't need the money currently. I'm just looking at some kind of insurance. I have spoken to a number of investment professionals and no one has a good answer.
What I would say is buy the options masterclass. Or if you don't want to spend $500 on the options masterclass, I'll just give it to you straight right now. So the way people hedge large stock positions is through what's called a collar, right? So let's say you're long Apple and Apple is $200, right? So you would sell the 220 strike calls, you would buy the 180 strike puts, and basically you collar the stock so it can only go between 180 and 220, right? And that protects your gains and you don't have to pay taxes, right? Now, let's say the stock goes down to 100. Let's say Apple crashes, right? Those 180 puts are going to be in the money. So you're going to sell the stock at 180 and you're going to take those gains unless you roll the puts down, which you can also do. So this is all fancy option stuff. I'm kind of surprised he talked to a bunch of advisors and nobody told him about collaring a stock, but that's what you can do. The other thing is, I mean, not to be, morbid, but if you're 71 years old, don't buy any green bananas, right? So like, collar the stocks. And then if you die, just pass them down to your kids, right? And they get the step up in cost basis, right? So it is, I will agree with him that it's kind of tough to justify paying a 20% tax on $1.5 million in gains, right? That's a huge amount of tax. But I will say, he's like, what do I do with the proceeds? Put it in cash. Put it in cash. Like there's nothing wrong with that. You don't always have to be fully invested. You don't always have to reinvest in stuff. Or if you do want to reinvest in stuff, buy small cap, right? Like, buy international stuff, like buy emerging markets. Like there's other stuff out there other than, US large cap growth stocks.
Looking at the week ahead, the August jobs report and earnings from companies including Salesforce and Broadcom are among the top events, continuing the AI theme from last week's NVIDIA earnings. What else? Do we want to talk NVIDIA earnings at all? It's down about 5%, I think, in the last month. Kraft Heinz, break it up into two companies. I saw Warren Buffett's a little upset about that. Shares fell about 7% on Tuesday.
The only thing I have to add is Heinz ketchup is just the food of the gods. You ever notice you walk into a grocery store and there's like 75 different kinds of mustard. You have honey mustard, you have like brown mustard, you have all these different kinds of mustard. There's one kind of ketchup, Heinz. That's it. There's one kind of ketchup and there's 75 different kinds of mustard. Like if you could go back in time 100 years and just create the perfect business, you have this product that everybody likes. They can't do without it. And it's just going to crank out cash flow for 100 years. That's Heinz ketchup. Incredible.
Yeah, we're not messing with Hunt's ketchup around here.
No.
No, we have no time for that. Okay, that wraps it up for this week. Thank you, Jared, for your time. Everyone, please like and subscribe to the channel. I got to go and pump some PSI into my tires. They're getting a little low. Peace out.
See ya.